The Indian market feels a jitter ahead of Trump's fresh set of tariff announcement. Market slips over 1% in trade. The sensex down over 1,300 points. 340-odd point cut in the nifty. Mid-caps relatively outperform. Micro-caps do even better.
Hindustan Aeronautics shares jump in trade. This is after the company bags an order worth 62,000 crore rupees from the Defence Ministry. Shares of Vodafone Idea climb after the Indian government ups its stake in the company by converting dues into equity.
The US is said to be kinder to its trading partners, says US President Donald Trump, ahead of reciprocal tariff deadline. Further claims India and other US allies are set to cut down their tariffs substantially. Hello and welcome to a fresh new edition of Markets Forward. We started the week on a risk-off mode in line with global markets because, global markets sold off at the beginning of the week. Actually, the sell-off happened on Friday and then they continued on Monday as well. We'll, of course, wrap up everything for you, all the key data points, stocks, etc. as we gear up for the next trading session. I'm Prashant. With me, my colleague Reema Tendulkar. Reema, hi.
I started the week and the financial year on a negative note, and you could say that there were Trump tariff jitters ahead of the 2nd April deadline. But it's a weak close, right? The Nifty ending below 23,200, and it's a steep 1.5-2% cut on the benchmark indices.
No, absolutely. And, on the Nifty, we, by the way, very quickly broke down to an important sort of retracement level, 23,142. It's a support we put out in the morning. And it didn't look like the way the market opened, then there was a bounce that we'd actually ever get to that number, but we did. We actually broke that level, and we closed barely 20 points above that level. So 1.5% sharp cut. But broader markets held up much better. So advanced decline was about 2:1. Micro-cap index, smaller shares. If you look at the SME space, etc. as well, that did much better. But I have to say, volumes were on the downside, unlike what we've seen over the past many days. You've had days over the last 5-6 sessions when advanced decline was negative, but volumes were on the upside. Today, volumes clearly were on the downside, even though numerically there were more stocks up than down. And I think that's something to wait and watch. FIIs, I think, were sellers on Friday after being buyers for many sessions prior to that. And I think that is something we'll have to wait and watch as well. But in any case, the big and perhaps the only game in town over the next 36-48 hours, of course, is what Trump really does with tariffs, implementation, the way he implements it, etc., etc. So I think that's a big one. We'll note tomorrow night, and of course, we'll be reacting to it on Thursday morning. Reema.
At least when the Indian markets wrapped up trade, the European markets were well in the green, up nearly about 1%. But let's tell you what we have lined up for you on our show today. We start with the top movers and shakers of the day. Hormus joins in. The stocks of the day were the telecom names, Vodafone Idea, Indus Stars, auto names in focus on the back of the March auto sales numbers. So Eicher Motors, M&M, will get you more details on these stories and then the key market events to watch tomorrow. But as always, let's get to the first segment of the day. It's Hormus. He's at the big wall with the top stock movers.
Well, possibly a reaction to digesting 2 days of global cues, right? We were off yesterday, so pretty much a reaction to what happened on Wall Street on Friday. And of course, it was the index heavyweights that led the Nifty lower, even as the broader markets were outperformers on virtue of not falling as much. But take a look at HDFC Bank, ICICI Bank, the principal culprits of the downside today. Infosys, Bajaj Finance, Reliance, all 5 of them contributing to at least 200 points out of the 350 that the Nifty shed in today's trading session. A pocket that was under pressure in today's session was real estate, and there was multiple news flows surrounding that. Of course, the top sectoral loser as well. All of the stocks on the realty index ending with losses of anywhere between 2 to 5% in today's session. IT was another sector, of course, because of the volatility seen on the Nasdaq over the last 2 days, ahead of its results as well. Some chaos, some uncertainty, volatility. Mid-cap IT in particular ending with losses of anywhere between 5 to 5.5% for Persistent and Coforge. HCL Tech and Infosys too among the key contributors to the downside. There are a lot of newsmakers in today's session. Cannot not mention Vodafone Idea, of course. at one point was up 25%. Indus Towers too cooled off from the highs but ended with gains. Lemon Tree ahead of the summers was a good performer in today's trading session, but it was a PSU banks though. Look at Punjab and Sindh Bank and UCO Bank, of course, low float PSU names, but ending with 20% and a 13% cut. And lastly, plenty of order inflow coming in today's trade. HBL Engineering ending off the highs but still 9% higher, as did HAL. Sterling and Wilson ended at the highs of the day after winning almost multiple orders, as did KEC International. And L&T, even after winning a major order, still ended at the lowest point of the day. Back to you guys.
Right, Hormuz, thank you very much for that. We have Jai Bala now joining us of Catch the Chaos, and we also Sudip Bandyopadhyay, Group Chairman at Inditrade Capital with us. Thanks very much, both of you. Jai, I mean, for those who are joining us now, I mean, just a view, Nifty Bank, I mean, near term. And of course, near term is interrupted by these tariffs tomorrow.
That's right. The markets are quite smart, Prashant. The markets interpret well ahead of the event, and they are actually driving an important message. And the very short term, the Nifty could, are likely to hold 23,090 and then probably bounce to some one high above the last Tuesday's high of about 23,869. That's the view I'm working with. But in the event that Nifty were to break 22,676, I think the high of 23,869 is already the counter-trend top. When it comes to the banking index, it could probably push to somewhere close to 52,600, probably driven by ICICI Bank. I believe ICICI Bank has one more higher highs to come through, possibly fresh 52-week highs, fresh all-time highs, as long as it doesn't print to 1280. But the key for the banking sector and the overall market, though, is HDFC Bank. If it were to print 1743, that will be a damage to the bulls. We don't want to see 1743 on HDFC Bank yet. The resistance for the banking index is 52,600 and 52,900.
Okay, got that. Let's get to the big story of the day, and that's in the telecom space, where the government has announced its intention to convert 36,950 crore of equity dues in Vodafone Idea into equity. Now, this will result in the Government of India's stake increasing from the current 22.6% to 49%, but operational control will continue to remain with the promoters, and the share issuance will take place at 10 rupees per share, which is the face value. It's positive for Vodafone Idea because, one, it increases the prospects of bank funding, and therefore the company can go ahead with its capex, perhaps help in stemming the subscriber losses, and two, the conversion will ease Vodafone Idea's spectrum repayments over the next 3 years, and that IFL, the table from IFL will come up how they expect that in FY26, Vodafone Idea's dues will decline from 29,000 on an annual basis to 18,500. FY27 and FY28, the dues will fall from 43,000 crore to 23 and 33,000 crore respectively. So it's a fairly big respite, though the payments continue to remain fairly substantial. The move is also seen positive for Indus Towers because it showcases the government's commitment for a 3+1 player market construct and a stronger Vodafone Idea. IFL and Motilal Oswal, though, believe that while this development is a positive, they're saying it's a lifeline, but it's postponing Vodafone Idea's problem. According to IFL, the underlying cash flow generation will be insufficient to meet the government payouts, and therefore they see the possibility of the government further converting dues into equity in the next 18 to 24 months, and that is negative for existing shareholders. They have a reduced rating. Motilal Oswal too concurs that this is positive, but it's pushing the can further down the road. The key problems with the company are stabilization of the subscriber base, AGR dues, that's the overhang. So they have a sell rating on Vodafone Idea, target price 6.5 rupees. Ambit, on the other hand, remains hopeful, though they do say that Vodafone Idea is only for high-risk investors, but they're keeping the hope alive because they're saying the government has only converted spectrum dues into equity. AGR is still untouched, and therefore that gives the government scope to consider relief measures with respect to AGR in the future. Citi has opened a 90-day catalyst watch list on both Vodafone Idea on Indus. Vodafone Idea too is a buy, but it's a high-risk trade with a target price of 12 rupees. Sudip is also, Bandyopadhyay is still with us on the show. Sudip, on Vodafone Idea, is there a tactical, is there a trading approach, any sort of view on Vodafone Idea? And what about Indus Towers? That is the other beneficiary.
Well, as far as trading is concerned, I think Jai will be able to better guide. But if it's from an investment point of view, I have been avoiding Vodafone Idea for a very long time, and I continue to maintain that it should be avoided. See, the fundamental problem goes much beyond all this, capitalization and AGR dues and spectrum dues. I think operationally they're losing customers month on month, and till the time that is stopped, I think fundamentally it is not worth looking at this telecom company. If a company which is losing customer month on month cannot prevent that, and we were expecting this bleed will get stopped post the QIP came in, but it didn't happen. And let's see what happens now, because hopefully they will be able to borrow money and launch 5G in multiple areas which they didn't have. Only when they will be able to stop the bleeding of customers on a monthly and quarterly basis, it will be worth looking. Before that, I think it's completely avoid. Of course, this is a short-term relief. This doesn't, take Vodafone Idea out of the problem completely. Definitely short-term relief gives them one more chance to try and work things out. Let's see what happens, but I don't think I will recommend a buy. Traders can keep trading and making money and enjoying the volatility. As far as Indus Tower is concerned, I think it's much better position. It is a much better positioned company. The business is strong. The only challenge here is that 5G rollout for most players is reaching its peak level. So incremental towers coming off incremental towers, the scope is very limited. So the growth of revenue will not be commensurate with what the growth was in the previous quarters and previous years. So I'll be a little skeptical. There's no problem fundamentally, but the growth seems capped.
Growth seems capped. No, point taken. You said enjoying the volatility or bearing the volatility. Sudip, but volatility there is most definitely. Now let's move on to the next one, right? The Maharashtra government has increased the ready reckoner rates across the state by 3.9% on an average for the year FY26. Real estate stocks slipped in trade today. Vinny's here with details on what this would mean. Vinny, over to you.
Yes, so this is a bit of a negative that comes in for these real estate companies, but not as much as the fall that we saw coming in. Now, overall, on an average trade basis, like you mentioned, we're seeing a 3.9% increase in terms of these ready reckoner rates. Apart from that, when you're looking at it for Mumbai, specifically the region, it's a 3.39% increase. This increase is the lowest that we've seen from other cities versus Mumbai versus the other cities. It's almost the second lowest that we're seeing coming in. Now, for the Maharashtra government, obviously, this is going to be increasing their revenue by 10,000 crore rupees in FY26. But for real estate developers, there would be an increase in terms of the stamp duty, other fees and property prices could see a rise coming in. Now, what is the catch over here? While we've seen Mumbai real estate developers see a fall today, the thing is that currently the hike that we're seeing is something that is acceptable. That's what Anurag is highlighting. Why? Because most of the transactions that we're seeing in the city are taking place at a higher market rate. So there's not much of a worry because they're taking place at a higher rate. So what would it impact? It would impact the properties that are mainly getting impacted would be the low price properties and low price markets. So that is where there would be a worry coming in, and that is going to be more specific in terms of certain regions.
Thank you very much for that. So affordable housing could take a bit of a hit. Jai, big fall in many of these Mumbai-based real estate companies. Fundamentally, analysts are not too worried, but technically, given the price action, what are you seeing?
I was bullish on the Nifty real estate index for the long term, but in the short term and the medium term, they could have little more downsides to work with. Probably the March lows will hold for some time. Most of the real estate stock could bounce around between the February highs and the March lows. But in my opinion, it's still got one more sequence of lower low to come through from a few weeks to a couple of months time frame. So once that's done, we can probably see how it's come there, and then we can evaluate if the long-term bullish scenario is starting to perk up. But the short point is in the very short term and from a few days to several weeks to a couple of months time frame, there might be a little bit of downside to work with choppy negative bounce to work with.
Okay, got that. Another sort of sector perhaps in focus is the auto space. Sales of Mahindra & Mahindra, TVS, Ashok Leyland, Royal Enfield exceeded expectations in the month of March. Maruti sales figures were a bit on the weaker side. Let's take you through the data. Sudarshan has got those. Sudarshan, over to you.
So the number of companies reporting sales better than estimates for the month of March is higher than the number of companies disappointed the street. So we'll start with two-wheeler companies. First one is Eicher Motors. For the first time, company has reported monthly sales that has come more than 1 lakh units. That is against our expectation of around 91,000 units. For TVS Motor 2, numbers were higher than estimates by 7%. But for two-wheeler companies, one thing that had to be factored in is the OBD, that is emission standard norm, that has come into effect from today. So because of that, the last week of March, we saw pre-buying, and that's the reason numbers for two-wheeler companies for the month of March are looking elevated. Now coming to the tractor companies, both M&M Tractor and Escorts Kubota have reported numbers much better than estimate. For Escorts Kubota, numbers were higher by more than 30%. It's almost similar for M&M Tractor as well. And both the companies are saying that last week of March, because of Chath Navratri, sales have increased. But the important part is they are expecting the momentum to continue even in Q1 FY26. Now coming to the commercial vehicle segment. Here, Ashok Leyland has outperformed Tata Motors. For Tata Motors, total CV sales have dropped 6%, while for Ashok Leyland, M&HCV sales have increased by 15%. In the passenger vehicle segment, the top performer is Mahindra & Mahindra, again led by SUV segment, which saw a growth of 23%. Against 23% growth for Mahindra & Mahindra, the growth for Maruti's utility vehicle or SUV has seen a growth of 6%, and for Tata Motors, the growth has come in at, for passenger vehicle, it's at 3%. So overall, it's a much better than estimates in entire, if you look at the auto sector for the month of March. But in the four-wheeler, M&M has outperformed. In two-wheeler, TVS has done better. And in the commercial vehicle, Ashok Leyland has outperformed.
Okay, all right. Thank you very much for that, Sudarshan. Sudip, any thoughts on these names? By the way, with Mahindra, there was another story, right? There was some worry at the margin that BYD, the Chinese company, is going to invest big time and set up a facility. I think there was some clarification that they're not doing that. Tesla is another story, though. What's your sense, and anything you own, any views?
Prashant, I'm not worried about either BYD or Tesla. I think Mahindra is doing very well. Look at the numbers. SUV. I think they're performing much better than the entire other SUV players. Their numbers are outstanding. Also, tractor sales is picking up, and I believe that with the monsoon is good this year. Again, the numbers will be good. Rural income is increasing, and I think this trend will help M&M. So amongst the auto companies, if I have to pick up one stock, I will go and pick up M&M. The Tesla and all that will not be really a competition for M&M in the near term. Even for that matter, BYD. I think these are a little at some distance, and one needs to understand and look at situation as and when it develops. I think today it's just in the realm of speculation. Mahindra's EV plans, yes, there are plans and those are interesting, but they also have to fructify. I think we should not try and give a valuation to these companies based on either the EV potential or EV competition. Let's look at the existing businesses and take a call on where they should go. Based on that, I think M&M comes out a winner.
Okay, M&M comes out a winner. Jai, got that. Jai, any specific trades, any stocks on your radar, positional wise?
Yeah, within the auto space, I liked Escorts Kubota, and we spoke about it last week, Prashant. But the very important message the auto sector is driving is that it shouldn't have printed, the Nifty Auto Index shouldn't have printed 21,197, and that has happened. The message from the auto sector is that this is corrective. But when it comes to the pecking order within the auto space, M&M is stronger than Maruti. Maruti is stronger than Tata Motors. Tata Motors, Bajaj, and Hero are more or less within the same bracket of weakness. We probably have one more lower lows to come through, even in the short term for the Nifty Auto Index. But the key point is that without the auto index getting strong, there can be no bull market. That's it's a rare event, but I don't think we are in such a rare event. That's a key message of the Nifty Auto Index printing 21,197. The bulls wanted to defend and take the markets much higher. 21,197 should not have printed.
Sudip, Trent was a big mover 5% in a weak market. The stock has corrected quite a bit. It's down 33% from its high. But is it attractive at these levels?
Is that 1,000-store announcement which worked wonders today to the sentiment. No, I don't think I will, start buying Trent. I think there are challenges which they are facing in their business now. Look, Zudio took them to the level they went to. Now Zudio itself is facing a lot of competition, both online and offline. So let's see. Let's wait and watch. I think the time for getting into buying Trent hasn't yet come, and it's not cheap by any stretch of imagination. So let's wait and watch.
All right, we'll leave it there. Thank you very much, Sudip. We'll chat again, I guess, day after when we have more clarity on these tariffs and maybe better sense. Jai, we'll speak again. Thank you very much, both of you, for being here with us. We'll take a quick commercial break here. We come back with some corporate voices that we heard on the channel through the course of the day and some events to watch out for tomorrow. Stay with us.
Welcome back. Let's now get to the key corporate commentary that we received through the day. First up, the management of Intellect Design Arena. They say that AI is driving significant productivity benefits and that could put pressure on the services industry. But the company Intellect is a product company and therefore it sees quarterly volatility, but on the whole, things are okay. They expect their AI platform, the enterprise AI platform called Purple Fabric, to generate revenues of 1,000 to 5,000 crore rupees in the next 5 years.
Okay, we have the management of Lemon Tree as well, and they anticipate a weak holiday season for resort hotels. However, the overall hotel industry will certainly see an uptick this summer. The hotel chain believes room rates will double over the next 3 years, and India is underpriced compared to global standards.
And lastly, Reserve Bank of India's new lending guidelines for priority sector lending is effective from today. Aadhar Housing Finance, like other housing finance companies, have told us that they expect the impact of the new lending guidelines to be felt over a period of time. In terms of outlook, the management expects the spreads to be in a range of 5 to 6.75% in the medium term and NIMs to be at 9%.
Okay, well, Vinny is standing by with what to watch out for as we come back tomorrow. I mean, the big one, of course, is only tomorrow night. Or actually early morning on Thursday. But what do we watch out for? Winnie's standing by. Winnie, over to you.
Apart from that, what we're keeping an eye out on is on the US front, we'll have the crude oil inventory data. So keep an eye out on that. We'll have the non-farm employment change for the month of March. That is something important to watch out for from the US market point of view. European Union side, let's keep an eye out on the CPI data on a year-on-year basis. We'll see it coming in for the month of March. And on the domestic front, we do have the S&P Global Manufacturing PMI data, so that is key to watch out for. Corporate actions, not much. Retail Corp will go ex-dividend tomorrow, so that is something to watch out for. And like you mentioned as well, overall tomorrow night is what we're keeping an eye out on, where we'll be seeing the Trump tariff data points coming in, or what is his decision on that front is key to watch out for.
That's the big one. Thank you, Vinny, for joining in. And that brings us to a close on this edition of Markets Forward. Thank you for watching.